What's your immediate reaction to the size of this cut? 300 basis points over the usual 250. What are they responding to?
I wouldn't make a big deal out of the 50 basis points price then, because when the policy rate is 43% at the current level, 50 basis points is more like a rounding error. However, what I can say is that the central bank's easing cycle, which started in December, was primarily motivated with the idea of protecting the real side of the economy, because the year-end inflation target back then was 24%, and the markets didn't think that 24% was a plausible target to reach. Most likely, the actual inflation rate would be around 30%. And I do think that the central bank kind of agrees with that, because the upper bound of the central bank's forecast was 29%. Yet they started the easings. But when the political tension escalated with the arrest of Istanbul Mayor Ekrem İmamoğlu, they had to pause the easing cycle, because at that point, instead of the real side, this time the primary concern was financial stability. Now that the financial conditions are stabilizing, the central bank is once again going back to its aim of protecting the real side of the economy because of the long tightening cycle. But I guess what I'm trying to highlight here is that inflation or price stability has never been the priority of the central bank. It is just either the real side or financial stability. And now that the financial conditions are kind of stable, the central bank is going back to its original goal of protecting the real economy while trying to gradually disinflate the economy.
So, Selva, help me understand, if this is a renewed commitment to easing, what's the realistic inflation outlook now given this rate cut? You say perhaps the TCMB is less focused on the inflation side now. If that's the case and the focus is on the real economy, then what are the metrics that they're going to be looking at to determine whether or not this type of easing will continue?
So the trade-off between growth versus disinflation has always been there in the Turkish economy because of the weaker central bank credibility, that the central bank's ability to control inflation expectations is not perfect, let's say. In that case, with a easing cycle restarting again, I would say that a more realistic year-end inflation level would be around 32% or so. So it's about 5 percentage points higher than central bank's year-end goal. Nevertheless, we do see that over the course of this year, as well as next year, inflation rate is going to be coming down. However, it is not going to be as ambitious as the year-end goals that the central bank has put forward. So it's going to be more growth, less disinflation, and the pace of inflation, unfortunately, is going to be just a bit slower than what central bank has in mind. That's primarily because, like I said, the credibility of the central bank is weaker, and the focus on growth has always been the priority, and the pressures on the central bank has always been there. You were talking about Trump and Powell. We have seen that in Turkey for many years, and the end result of this game is that a central bank under political pressures unfortunately gives in, and therefore the inflation rate is going to be higher, while the growth rate will probably be around 3% this year.
Just on that point, how would you assess the independence of the central bank today? You and I previously have spoken about how it was called the central bank of Erdogan. Is that still the case? And can markets give any credibility to this central bank governor and the forward trajectory on rates?
Markets do give credibility to this central bank, especially after the general elections in May 2023. The central bank did return to orthodox policies, and they did hike more than 40 percentage points in less than a year. So clearly the new team is given political freedom. However, if we are talking about a major trade-off in order to disinflate the economy to single digits, you might need to accept the price of a recession. I don't think recession is something that Turkish policymakers would accept as a acceptable price for disinflating the economy. Therefore, instead of, let's say, 5% growth, the compromise is to bring growth down to 3%. And instead of a 5% inflation target, we have an inflation rate around 35% now, which will be around 30% by the end of the year, and hopefully 25 and 20 and so forth. So I don't think it is black and white. I don't think we can say the central bank does not have independence, but it is not like the Western central banks either. Well, the Western central banks, especially the United States, is something that is fading away from its traditional independence and approaching more of an emerging market economy like Turkey.
Really interesting observation. Selva, while we're on this topic, just walk me through what you think all of this means short to midterm for the lira as well. Of course, the currency certainly in the crosshairs, particularly in the aftermath of the arrest and takedown of the Istanbul mayor, Ekrem İmamoğlu. You mentioned this earlier, but of course, global markets, global investors watching the geopolitics very closely in Turkey as well for any signals on what this means, not just politically, but also financially as well, given the lira's volatility. What's your view?
Well, one of the anchors of the disinflation program was to tighten. The other one was to keep the Turkish lira appreciate in real terms, but in a stable and gradual manner. The central bank promises the foreign investors in particular that the value of the lira is going to be stable and it is going to appreciate in real terms. Therefore, the capital inflows into Turkish economy are going to benefit from not only the high interest rates, but also they are not going to experience a sudden depreciation in the Turkish lira. Therefore, at the end of the day, it will be a worthwhile investment. They maintain that promise, and in yesterday's policy announcement, we still see the signal of the continuation of the real appreciation of the Turkish lira. And following that trend, I would expect that for the end of the year, we are expecting another 10% or so depreciation in the Turkish lira, which would bring the dollar-lira exchange rate to around 43 lira per dollar.
These crackdowns do indeed have an impact on investor confidence and the economic outlook in Turkey, though, do they not?
Yes. So after the arrest of Istanbul mayor, we have seen a significant financial turmoil. There has been capital outflows. Central bank's reserves declined from $65 billion. Those are reserves net of swaps. And from $65 billion, it went down to $13 billion. So central bank had to sell significant amounts of its reserves to stabilize the currency. Things have been stabilizing. The capital inflows restarted, but in a more cautious manner. So we are not back to where we were before the events of March 19. But right now, central bank's reserves are around $44 billion, which I think is the main reason why central bank was able to cut rates again yesterday, because now that they have enough reserves enough buffer at least, to protect the lira in case there is another trigger to cause capital outflows. So yes, the nervousness of international investors as well as domestic investors are there. However, things are not as bad as they were 3 months ago.